The stock market just had its worst day of the year. The Dow Jones plummeted over 700 points on Friday.
The worst day of the year so far. The Dow losing 748 points,
marking its steepest decline in all of 2025.
The Dow and S&P 500 turning in their worst session of the year so far.
But here's what's even crazier. The richest people in the world are all cashing out at the same exact time. Warren Buffett, Jeff Bezos, Mark Zuckerberg, and even the Walton family.
A string of high-profile CEOs, founders, and heirs are selling a massive amount of stocks at their own companies lately.
They've all quietly been selling billions of dollars in stock over the last several months.
Warren Buffett, the best investor that has ever lived, is currently selling massive chunks of his portfolio.
Jeff Bezos quickly cashed out $8.5 billion in 9 trading days. Mark Zuckerberg also unloaded 1.4 million shares of Meta stock.
The day before the Dow plummeted, the CEO of America's largest bank, JP Chase, announced he's going to sell $233 million worth of the company's stock.
Jamie Dimon, chairman and CEO of JP Chase, made his first cash out and sold $150 million in stock.
These wealthy individuals are not just trimming positions. We're talking about massive, record-breaking sell-offs. Before we get started, today's sponsor is Mustang Energy, stock ticker MECPF, but more on that in just a little bit. Warren Buffett, America's most prominent investor, has been a net seller and has been unloading shares over the last 9 consecutive quarters. That's a combined $166 billion worth of stock sold. But here's the kicker. He's now sitting on $334 billion in cash inside of Berkshire.
Warren Buffett, who's sitting on a record cash pile at over $325 billion.
Berkshire Hathaway's cash pile here. The cash pile has reached a record $325.2 billion in the third quarter.
He now owns $91.1 billion more of treasury bills than the Fed, and he won't say why. In his highly anticipated annual Berkshire letter, he did not say what he's waiting for. Instead, he said this was not a move away from stocks, and that he still loves investing. But let's be real, the rich, especially at that level, they do not make buying and selling decisions based on love and emotion. And Buffett is not alone in this. Jeff Bezos just sold $5.1 billion in company stock. This is the largest sale that he's had since he stepped down as CEO of Amazon. The question is, does he think Amazon's best days are behind it? Then there's Mark Zuckerberg. He just sold $500 million in Meta stock. And here's where it gets weird. Meta is doubling down on AI.
Meta doubling down on artificial intelligence. CEO Mark Zuckerberg announcing the tech giant is pushing deeper into AI.
Abandoning the metaverse. Does he see AI as too unpredictable? Or is this just a pivot? Even the Walton family, the heirs to Walmart, just sold $5.1 billion in company stock. Is this all just normal portfolio rebalancing? Or are they worried about consumer spending slowing down? We've all seen sell-offs before, but not like this, not all at once. Not when inflation is rising again. Not when credit card debt is at an all-time high.
More than $1 trillion. That's how much it would take to get Americans out of credit card debt right now in this country.
Cost of living increases due to inflation, paychecks not keeping up, and interest rates rising on credit card balances.
Not when corporate debt is hitting dangerous levels. This isn't just billionaires taking profits. In just the last quarter, Americans added another $45 billion in credit card debt. And with credit card interest rates sitting at 23%, paying it off is nearly impossible. We're seeing more defaults, more late payments, and people borrowing just to afford basic needs. So while the richest people in the world are sitting on billions in cash, the average American is drowning in debt. Something just doesn't add up. Billionaires do not panic sell. They move strategically and quietly. So the real question is, what do they see coming next? Let's connect the dots. Inflation is reaccelerating. Even after the Fed's aggressive rate hikes, inflation jumped 3% in January alone.
U.S. inflation rose to 3% for the 12 months ending in January.
Food, energy, housing all kept rising, making it harder for people to afford the basics. And tariffs and trade wars now entering the conversation. Trump's proposed tariffs on China and Mexico and Canada at 25%. And some believe if something like this does happen, it will push inflation even higher. And history shows businesses do not absorb these costs, they push them onto you.
86% of consumers reported feeling frustrated with rising grocery prices, and over a third said they have resorted to buying fewer items to save money.
How much of an increase could a consumer see?
I think it's going to be a minimum of 5. It could be up to 15%.
As that's happening, a $2 trillion corporate debt wall is maturing in the next 12 months. Major U.S. companies are sitting in $2 trillion in U.S. debt. This debt must be refinanced at much higher interest rates.
Corporate debt is coming due in the next few years. Companies are forced to refinance at higher rates.
Or they could go bankrupt in a worst case scenario, pushing on those losses onto banks and investors. This means more layoffs and more budget cuts. And some companies could even go under.
Goldman Sachs says up to 300 million full-time jobs around the world could be affected by artificial intelligence.
It's no surprise that big companies are cutting back, offloading debt, and racing to invest in AI. The entire economy is about to shift, and billionaires are preparing first. But here's another possibility. What if this isn't about an economic crash, but about where the smart money is going next? From Amazon to Meta to Google, the biggest companies are dumping billions into artificial intelligence, planning to spend a record-breaking $320 billion in AI alone in just 2025.
3 of the world's leading technology CEOs, and to announce the largest AI infrastructure project by far in history, and it's all taking place right here in America.
Are billionaires selling to reposition for an AI boom? Or are they getting out before something bigger collapses? So what do you think? Are billionaires getting out before the next crash? Or is this just a routine move? Are we heading into a major economic downturn? Or are they just shifting money into AI and emerging industries? And most importantly, if the richest people in the world are selling, should you be worried? Here's my take on all of this. It's very rare that the smartest people and wealthiest people in the room are all making one move, and that move is to sell, and they're all wrong. Usually, it's when the masses are all buying, the wealthy are selling, and when the masses are selling, the wealthy are buying. Here's what I think is going to happen. I think something very big is going to unfold inside of the U.S. economy. If you look at how much money has been printed over the last 5 years, what happened with interest rates going from essentially zero to where they are right now, a $2.7 trillion wall of commercial real estate debt that's refinancing over the next 2 years. $1 trillion of debt in just multifamily is refinancing this year. As inflation soars and home insurance is going through the roof, property taxes going through the roof, consumers really tapped out. These billionaires are looking at their stocks saying, hey, this stock has went up 5x, 7x, 10x over the last 5, 6 years, 10 years. I'm going to take some risk off the table. And I think this is what they're doing. They're taking risk off the table to position themselves for a severe economic crisis ahead. And I believe these companies, these very large companies, they're going to do extremely well. They're likely going to lay off many employees and lean into automation, robotics, technology, AI, generative AI. I mean, the world is about to change, and these billionaires are getting ready. They realize consumers are not likely going to spend like they were in the past in the distant future. And so they're getting ready for something really big. On January 20th, 2025, the global energy landscape experienced a major shift. President Trump announced a national energy emergency to expedite approvals for energy infrastructure, including nuclear power. His pick for U.S. Energy Secretary, Chris Wright, has emphasized that nuclear energy will be a core part of the domestic energy strategy. Just across the U.S. border, Canada's Athabasca Basin is home to some of the richest uranium deposits in the world, with Canada poised to become the world's top uranium supplier. Today's sponsor, Mustang Energy, stock ticker MECPF, is focused on securing a key position in this booming market. Why uranium? Why now? AI, data centers, EVs are driving electricity demand. Tech giants like Amazon, Alphabet, Oracle are investing in nuclear energy. Uranium spot prices are down 36% from their peak, a potential opportunity. Canada's uranium output is projected to double by 2035, ensuring a steady fuel supply. Mustang Energy's key projects in the Athabasca Basin, Ford Lake near Comicos, Millennium and Denison's Graphon deposits, Cigar Lake East, and Rough Rider South, close to Cigar Lake, one of the highest grade uranium mines. Yellowstone, south of Fission, uranium's $789 million acquisition by Paladin Energy. Dutton and Spur, underexplored high potential uranium zones. The uranium market is facing a severe supply shortage. While demand skyrockets, the U.S. heavily relies on foreign uranium, increasing the need for secure North American sources. Mustang Energy is working with industry leaders like Axiom Exploration, DeRogue Geological, and Sky Harbor Resources to develop key uranium projects. This video is sponsored by Mustang Energy, but don't just take my word for it. Check out all the details with the link below and decide for yourself. Now, I believe these billionaires are going to invest in a variety of different things. It could be the infrastructure in their companies. It could be their own personal real estate holdings, land. It could be gold and silver in some capacity. There could be a variety of different investments. They could be buying properties in different countries and just spreading out and diversifying their risk more and more and more. As the world gets more unstable, they're going to want more options. And I believe we're going to walk into something, really big here. I mean, look at how much Warren Buffett and Berkshire are sitting in, $334 billion. When you look at where they were in 2005 and 2006, they had a mountain of cash. And then as things started to crash in the economy, they were deploying that money. And I think that's exactly what's going to happen. Many small companies are going to start going out of business as they can't refinance this debt. And these large corporations are going to start absorbing that market share. It would not surprise me to see Amazon and some of these other companies entering all these different industries through AI over the next couple of years. It's going to be a really, really, really interesting 2025 to 2030. And I think there's going to be so much money to be made for everyone if they are positioned outside of consumer debt. No consumer debt, cash in the bank, a good business or a good job, and just in a spot where they can invest when things get hard. Because I believe things are going to get hard. But inside the hard times, incredible, incredible opportunities are found. What do you think about this entire situation? What do you think about all these very wealthy individuals, some of the richest people in America, all doing it at the same time? What do you think about this? Let's have a conversation below. And for more information on today's video sponsor, you can click the link in the description just below this video. And I'll catch you next video.